Good morning, everybody. Today it is 15th of March. I am Devarsh from HDFC Securities, and this is our daily morning podcast. First, about the American markets. US stocks dropped on Thursday, with chipmaker stocks extending losses for a second day as a jump in producer price left investors wondering if the Federal Reserve might wait longer than expected to cut interest rates. Data showed US producer prices increased more than expected in February as the cost of goods like gasoline and food surged. The PPI for final demand rose 0.6% last month, above the 0.3% climb forecast by economists poll, after advancing by an unrevised 0.3% in January. The People's Bank of China on Friday kept the rates on its one-year policy loans steady at 2.5% as expected by most economists. Oil held near a 4-month high after the IEA forecast a supply deficit through 2024, changing its earlier projection of a surplus, on the premise of OPEC Plus maintaining the production cuts. State-run oil marketing companies announced a reduction in petrol and diesel prices by rupees 2 per litre across the country to be effective from 6 am on March 15th. Asian markets opened lower following decline in Wall Street as new data weakened the case for imminent Federal Reserve interest rate cuts. Back home, Nifty ended higher on March 14th, recovering from the worst sell-off in the previous session amid buying across sectors. At the close, Nifty was up 148 points at 22,146. Nifty made a small bull candle on March 14 and did not breach the lows of the previous session or the near-term lows. After the knee-jerk reaction to the previous session's brutal sell-off, Nifty could now return to normalcy. It could now stay in the 21,918 to 22,325 band for the near term. Indian markets could open lower in line with lower Asian markets today and negative US markets on March 14th. That's all for the day. Investment in securities is subject to market risk. For detailed disclaimers, do visit our website www.hdfcsec.com. Thank you for listening and have a profitable day ahead.